Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's December 9th, and another light day in the economic calendar here. This week, as we mentioned, is going to be a light one. So today we basically got a wholesale inventories back for October, and back in September we had a 0.5% increase in the wholesale inventories, but when it came to October, it actually fell down 0.1%. So not a whole much change in the wholesale inventories of things. So obviously people aren't stocking up heading into the fourth quarter, it looks like. Stock market is down. Actually, in the morning, further in the morning, it was actually going up. It was rallying because oil prices were actually had a slight improvement. It looked like there was going to be a rally in the oil prices, and then it did a 180 and started dropping again, and then hence the stock market is down. So to give you an indication, the Dow was actually up about 200 in the morning, and now it's actually down over 100 this morning. So it had a 300 point swing in the Dow market. Pretty crazy morning because that's if you've been following this for this week with the oil prices dropping this whole week. This is actually the reason for the stock market decline for the most part. Something I didn't put in there is there's going to be, it looks like a pretty big acquisition between two large chemical companies, between Dow and I forget the other one, but they're the two large ones. DuPont. It looks like they're going to be merging with like $120 billion. Wow, those are some pretty big numbers there. Let's go ahead and take a look at the bond market, and here we go. As you can see, it's down. Don't freak out about yesterday's, that big long red line. It's actually, we had a bond rollover yesterday, so it should be about 28 basis points higher than that. So we actually did pretty good. We kind of, by the end of the day, we're actually up about 6 points yesterday, and today we're right now, as you can see with the star, we're kind of about where we are actually at zero. So basically, we're at the point where we closed the day yesterday. But because bond rollover, it looks worse than what it is, and that translated as every 30 days, roughly 30 days, they package the mortgage bonds. That's why we go in like 30-day locks, and you get pricing on 30-day locks with interest rates. They package them up and they sell them on Wall Street as mortgage-backed securities, and primarily in this, and they get refresh the pricing. So it looks like it's worse, but the pricing is actually the same. So there's no issues in terms of where your interest rates are. There's no change. So just kind of give you a heads up not to worry about those things. We do got, as we can see, our next resistance level is way up here on the 200-day moving average. This gives us a little bit more room to have more gains going forward. Now, with the Fed meeting coming up next week, it may be a good time to be floating to see how bonds react to the Fed, because typically they they do well in those terms, because the biggest enemy for bonds in terms for interest rates is inflation, and by Fed raising interest rates, it fights that inflation, so they usually rally. So we could see a nice improvement coming forward next week with the Fed. We'll have to kind of, again, watch and see where things come up at. Alright folks, so we're basically the same where we left off yesterday. There's really no change in terms of pricing today from where we left off. Alright, you guys have a great day. We'll see you guys tomorrow. Thanks so much for watching. Bye.